Ladies and gentlemen, good day and welcome to Hindustan Zinc Limited third quarter FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Jhalak Rastogi, Associate Director, Investor Relations. Thank you, and over to you, Ms. Rastogi.
Thank you. Good evening, everyone. I welcome you all to Hindustan Zinc's third quarter and 9 months ending 31st December 22 results briefing. On behalf of Hindustan Zinc, I wish you and your family a very happy New Year 2023. In this call, we'll refer to Q3 FY23 investor presentation available on our company's website. Some of the information on this call may be forward-looking in nature and is covered by the safe harbor language on slide number 2 of the said presentation. Today on the call, we have with us our CEO, Mr. Arun Mishra, and our Deputy and Interim CFO, Mr. Sandeep Modi. Mr. Mishra will begin with an update on business performance, while Mr. Modi will walk you through financial performance, after which we'll open the floor for questions. I now request Mr. Mishra to begin today's call. Over to you, sir.
Thank you, Jhalak. A very good evening to all of you. First of all, I would like to wish you and your family a very happy New Year 2023. Thank you for joining us today for the third quarter and 9 months of FY23 results briefing. This quarter, the key theme and highlights remain sustainability and community at Hindustan Zinc. Mentioning a few of the initiatives, during the quarter, Zinc family participated in Run for Zero Hunger Vedanta Delhi and Pink City Half Marathon, rolled out an electric vehicle policy for the employees under Evolving for Good initiative, successfully organized 6th edition of Vedanta Udaipur World Music Festival, and hosted India's largest and first underground All India Mines Rescue competition. And now, we are thrilled to enter into the new year and the last quarter of this financial year with great vigor, towering optimism, and growing opportunities and fresh targets. Coming to our key priorities on safety front, we are extremely mindful and conscious of the fatalities happened during first half of FY23, and the working committee have been regularly identifying critical areas requiring improvement to address potential risks and have been determined to provide support to our people wherever required. This quarter, it gives me satisfaction to report a fatality-free operations. Safety and people are the most important pillar and priority for us at Hindustan Zinc, and it is our commitment and vision to ensure that all our employees return home safely. Zinc safety team continues to drive various projects and initiatives in order to meet our vision of eliminating fatalities and serious injuries. It is heartening to see the efforts of entire Zinc leadership team fructifying. An update on our key priority in ESG, in line with our commitment to net zero by 2050, I am happy to share that we have received board approval to undertake another long-term captive renewable power delivery plan up to a capacity of 250 megawatt for a further investment up to rupees 430 crores. I am also delighted to inform you that Hindustan Zinc has secured third place globally and first overall in Asia Pacific at Standard & Poor's Global Corporate Sustainability Assessment Score in metal and mining sector. We have been recognized as A- category in climate change and water security in CDP 2022, a movement upwards from last year's performance. In addition, power plants at Dariba Smelting Complex and Jawar received Platinum Award at FAME Excellence Awards 2022 in energy efficiency and best practices of industrial water management categories respectively. These recognitions play a significant role in motivating us to march ahead in our ESG journey. Coming to an update on our on-ground CSR activities, it gives me immense pride to inform you that Hindustan Zinc has been felicitated with S&P Global Platts Award, and our 7 units have been bestowed with the 26th Bhamasa Award, reflecting our commitment for the remarkable work undertaken in the field of education-related community development initiatives. This recognition of our continued commitment towards education gives a sense of satisfaction to each one of us. Our CSR team continues to strive towards making positive impact across array of fields and are delivering on various initiatives and activities across the areas of education, sustainable livelihood, women empowerment, health, community asset creation, and water and sports and culture through their well-rounded on-ground efforts. Strengthening our commitment towards health of our local communities, Hindustan Zinc provided an oncology vehicle for early detection of various cancers to Rabindranath Tagore Medical Institution on its 60th Foundation Day. I would like to share that 2 of our Zinc football players got selected in the national camp. Also, our football players made their debut in All India Football Federation Elite Under-17 Youth Cup with incredible wins over top Indian youth teams, and the Under-17 team of Zinc football players finished third in the 18th edition of Administrators Challenge Cup held in Chandigarh. Moving on to the market, overall picture remains similar to previous quarter. The global economy continues to be impacted by the multiple forces, including inflationary pressure, Russia-Ukraine war, and slowdown of Chinese economy. Inflation has been universal, impacting almost everybody globally, and the measures are being taken to combat these forces, the impact of which is expected to show in subsequent years. This quarter has seen the peak of it, with China reopening faster than expected and easing of power prices, along with unusually warm winter in Europe. A tepid rebound is expected, resulting in slight lowering inflation and slowing growth. For 2023, IMF projections suggest weak or no growth for most major economies, then gradual recovery in 2024. IMF forecasted the global growth of 3.2% in 2022 and 2.7% in 2023, and the global inflation to decline to 6.5% by 2023 from 8.8% in 2022. The growth number for India has been forecasted at 6.8% for 2022 and 6.1% for 2023, reflecting resilience despite a challenging external environment. Supply and demand forces remain underperforming. On the supply side, smelters all across the world face an acute margin squeeze due to rolling energy crisis. Energy crisis has brought news of smelters being put up into care and maintenance, leading to concerns around the supply of metal. At the end of December, LME stocks stood at about 30,000 tons as compared to 140,000 tons at the start of the year at April 2022. Whereas stocks in FHFU warehouse at the end of December stood at 20,000 tons compared to 176,000 tons at the start of April 2022. With exchange stocks falling to multi-decade lows, spot premiums in Europe remain well supported at elevated levels. On demand side, global uncertainties have started showing early signs of slowdown in the metal demand. Global consumption fell by 1.4% in 2022 to 13.8 million tons. Rapid easing of COVID restrictions in China and slowdown in US inflation initially boosted the zinc price. However, considering the wave of infection surging across China is likely to disrupt the economy well into next quarter, the price lost ground. In 2023, the relaxation of COVID restrictions in China and infrastructure push in USA will be the main driving force behind the forecast recovery in demand, which is projected to grow by 1.4% to 13.98 million tons. The S&P Global Eurozone Construction PMI fell to 43.6 in November from 56.5 in April on account of higher costs and supply chain constraints, which affected output as well as demand. Touching briefly on lead prices witnessed an upsurge in the quarter and closed out at $2,335 per ton, an approximate improvement of 24% from September 2022. Global lead demand is expected to rise in the medium term due to steady new vehicle and replacement battery use, as well as utilization of lead batteries in EVs for auxiliary functions. Lead demand is expected to exceed supply in 2022 and 2023. Global supply is set to fall 0.3% to 12.34 million tons because of lower output in Russia, Ukraine, and Germany. At the same time, global demand is set to rise 0.8% to 12.42 million tons following a modest rise in Chinese demand due to lead-acid battery export. Coming to silver, prices witnessed an upside in the quarter and closed out at $23.95 per troy ounce. The supply side looks to be diminishing. Silver inventory is at 2-year low globally, while output from mines has also been dropping continuously. making silver attractive for the medium term. Further, silver demand in the solar power sector is expected to continue to grow as nations look to develop green energy. On the domestic front, the economic environment in India remains buoyant. The sentiment is buoyed by optimism that demand would remain strong. This was reflected in S&P Global Manufacturing PMI in December 2022, which was at 57.8, indicative of expansion in the manufacturing activities. Further, the Indian economy is on track to achieve 6.8 to 7% GDP growth in the current fiscal and is in a better position to navigate global headwinds than other major emerging economies. With the union budget coming in, government's focus is expected to remain on infrastructure development, which will see the consumption of zinc grow sustainably in 2023. Now turning to our third quarter results, starting with key highlights on page 9. I am delighted to inform that Hindustan Zinc has delivered a record 9-month production with highest ever mined metal and refined metal, and with this run rate, we are fully geared to deliver another stellar performance this year. Mined metal for 9 months was up by 5.4% year-on-year, and refined metal was up 7.9% year-on-year. With consistent MIC flow from mine and better plant availabilities, our volume delivery has been on the up curve, and we are on the right track. The quarter performance on a consolidated basis was impacted by rising input costs, inflationary pressures, and unfavorable macros, and amid this challenging macroeconomic environment, we delivered a strong EBITDA margin of 52%. We have also been up to speed in some key projects. For our fertilizer plant, we have locked in partner. Roaster and alloy plants are also in advanced stage. On strategic development, I am happy to share that the board has approved the acquisition of THL Zinc Limited, having zinc mines across South Africa and Namibia, subject to receipt of requisite regulatory approval. These zinc assets have an R&R of about 35 million tons, which is equivalent to that of Hindustan Zinc. This will help drive our growth inorganically by creating substantial synergies and unlocking values. I am also happy to inform that Hindustan Zinc is now REACH registered, which will enable us to penetrate the European market. We have started selling in Europe and consider it a good opportunity to expand our market base further. All this while, we continue to export to our neighborhood countries and Southeast Asia. With continuous new developments and increased momentum in projects, along with valuable learnings and some of the key structural changes that we have discussed over the last few quarters, alongside increased use of technology as well as learning deployed, we are confident to deliver the projected volumes for FY23 and move even beyond the same in coming years. Having said that, our production guidance for the fiscal year remains unchanged. With this, I hand over the call to Sandeep for an update on the financial performance. Thank you.
Thank you, Mr. Mishra, and very good afternoon, everyone. Hindustan Zinc has delivered a record-setting operational and financial performance with highest ever 9 months revenue and EBITDA along with PAT, and has delivered another set of strong results despite the global cues and input commodity inflation. We have laid a strong foundation for this landmark year by achieving a significant milestone of historic high 9 months volume. The last few months have seen the global economy grapple with inflation, despite which we are strongly moving forward, demonstrating our determination and resilience. Our quarterly performance was backed up by operational efficiency initiatives and volume delivery, keeping us ahead in this ever-evolving and volatile business environment. Refer to slide 16 for an update on our financial performance for the third quarter and 9 months ended December 22. For the first 9 months of FY23, revenue from operations stood at rupees 25,589 crores, an improvement of 24% for the same period last year. This was supported by improved zinc LME and volume gains from strategic hedging, favorable exchange rate, and better lead and silver volume, which was partially offset by lower lead and silver prices. Revenue from operations during the quarter was at rupees 7,866 crores, down by 2% YOY, majorly on account of lower zinc, lead, and silver prices. Lower refined metal and silver volume, which was partially offset by favorable exchange rate and gains from strategic hedging. Sequentially, revenue decreased 6%, primarily due to lower zinc prices, lower lead and silver volume, and lower gains from strategic hedging, partially offset by favorable exchange rates, improved zinc volume, and improved lead and silver prices. For the 9 months, the COP stood at $1,272 per ton, 14% higher YOY in USD terms and 22% higher in INR terms. The COP was up mainly on account of elevated coal prices, poor domestic linkage coal availability, and input commodity inflation. It was partially offset by higher volume and improved operational efficiency. Zinc cost of production before royalty during the quarter was $1,293 per ton, higher by 13% YOY and 3% sequentially. In the INR term, it was 24% YOY and 6% sequentially for the same reason. Further, for quarter-on-quarter, it was higher on account of consumption of high-priced fuel inventory coinciding with lower acid prices and grade. The resulting EBITDA for 9 months of FY23 was at rupees 13,382 crore, an increase of 19% YOY, driven by improved metal and silver volumes, higher zinc LME prices, and gains from strategic hedging, and favorable exchange rate partially offset by higher costs and lower lead and silver prices. EBITDA for the quarter was 3,717 crore, down 15% YOY and 15% sequentially as well. This movement was primarily driven by lower revenue due to zinc prices coinciding with increased cost on account of prevailing input commodity inflationary environment. Please refer to EBITDA brief from slide 18 to 20 for further details. Net profit for the 9 months FY23 was rupees 7,928 crore, a growth of 18% YOY, led by higher EBITDA, partially offset by increasing tax. Net profit for the quarter stood at rupees 2,156%, down 20% YOY and sequentially, majorly on account of lower EBITDA, offset by lower tax expense. ETR for the third quarter was close to 32%, and if we see a 9 month, it will be approximately 33%. That said, our cash tax is much lower due to available net credit. Once we move to new tax regime for the next financial year, our tax rate will be around 25%. I'm happy to inform that board has further approved the third interim dividend of rupees 13 per equity share, amounting to rupees approximately 5,500 crore. This reinforces our commitment of providing superior shareholder returns continuously. Entering Q4 23 with softened coal index and increased optimism on coal availability domestically, we are confident on meeting our annual guidance and thereby maintaining our leadership in the global zinc cost curve. Further, as mentioned by Mr. Mishra, with the new RE power tie-ups coming in, it will not only further improve the cost predictability, but will also contribute towards the improvement of cost structure in the longer term. With this, I now open the floor for your questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. First question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, hi. Good evening, everyone, and thanks for taking my questions. I have a couple of questions. The first one is on the brand and strategic management services to Vedanta, that agreement at 2% of consolidated turnover. So just wanted to understand what was the need of this agreement at this point in time, and how will Vedanta contribute more meaningfully than it was already doing? And if you can highlight the broad contours of the agreement, that would be great. Does it carry any escalation clause and all? So this is the first question.
So if you look at it, it was long overdue. Not that this is at this point of time we are beginning something. It is long overdue. Hindustan Zinc has been benefiting from the association of Vedanta, not only as per the brand of Vedanta is concerned as a global resource company, as well as various strategic services that it receives from Vedanta, including management assurance system services, which is very comforting for all shareholders, while also all the growth trajectory of Hindustan Zinc has been always guided by the risk-taking ability of Vedanta. So that if you factor those two, and also induction of more and more digital, more and more automation, completely revamping the management structure, ensuring various centrally guided management control systems, has taken Hindustan Zinc to the level at which we are operating today. And so this, in my opinion, was long overdue. We have got the approval today, and I think this is in line with the practices adopted by most of the multinationals or the bigger companies, where the units receive strategic services and the benefit of association with the principal brand which the group is known for.
Is there any escalation clause also that, this 2% can move to by certain bits after a few years or something? If you can share some broad contour, the timeline of the agreement, if there is any, that would be helpful.
So Amit, this Sandeep here. As of now, this is 2%. As and when anything board approves, we will come to you. We will come to know to you.
Okay. The second question is essentially subscription of shares in THL Zinc. Now, if I look at the consideration that is being paid and the EBITDA that this asset generates, it looks that it is at a higher valuation compared to global peers. So, while I understand the synergy part, but just wanted to understand that is the synergy, and there won't be any, when the synergy between the operations because you operate in different territories altogether. So, just wanted to understand, what kind of synergies we are looking at to pay a premium of, according to my calculations, the EV EBITDA works out to around 8.5 times. So, just wanted to understand it more.
So right now they are principally operating one underground mine and one big Hansberg open pit mine. This is one of the biggest open pit mines in the world with the zinc ore in it. And this is at this time we are entering almost equally. You can see the equivalence between what Hindustan Zinc was sometime around 2006-7 or 2007-8. So we have got resource for open cast mining for some more years, while at the same time there are very good grade resource which has to be developed in the manner of underground. And Hindustan Zinc, with it, brings in the expertise of high volume underground mining in the most modern methodology. And also Hindustan Zinc brings in with it the capability for concentration of the ore as well as smelting of ore, which will be the value addition to the property that we try to acquire. Together, the resource base of Hindustan Zinc gets doubled by this acquisition, and also the potential of production capacity gets doubled up to 2 million ton, with 1 million ton from India and 1 million ton from South Africa. Two different geographies, but two having fully integrated operations, which almost nobody has. And with this kind of capacity, with independent markets, wherein India will be on India, Southeast Asia, Africa would be more on the US and Europe territory or Middle East territory. So with that two together, we will be controlling a large part of global market. At the same time, we will be utilizing the capability that Hindustan Zinc has developed over the last so many years of operation of concentrators and smelters. And also Hindustan Zinc will help this new unit to transition into underground mining in a very safe and very productive manner. So if I look at it another way, almost 31 million ton resource base with Hindustan Zinc market cap of about 17-18 billion. So we are similar resource base there and similar production potential is there. So that's why to me it is strategically one of the best decisions that both could have taken.
Sir, just a comment, the potential was always there and there were challenges in developing this resource. Now paying a premium, the valuation 8.5 as I mentioned, looks little bit steep in my view. While I understand the overall potential of the resource, but how much time you will take to kind of bring it online and the benefits basically on board. Plus the premium part makes it a tad uncomfortable, nothing else.
So always all factors were duly considered while taking this decision. Just to give better comfort, the current operations at that unit is about 300,000 tons of metal and concentrate production, and they are already the projects have been commissioned on the ground to double this capacity in next 2 years' time. And parallelly, we are working on the smelting capacity. So very soon the capacity can be doubled at that place. And while we launch further projects to take it up to 1 million ton, as has been the vision. And that's why I'm saying it is at the inflection point what Hindustan Zinc was sometime in 2006, 7, 8 or so, when the new acquirer were planning for expansion of this mine, which was hardly at time 1/9 or 1/10 of the capacity as it is standing today. Rest all factors have been duly considered while doing this approval.
Okay, so thanks a lot and all the best.
Thank you.
Thank you. I request all the participants, please restrict to 2 questions per participant. If time permit, please come back in the question queue for a follow-up question. The next question is from the line of Pinakin Parekh from JP Morgan Chase. Please go ahead.
Yeah, thank you very much. I have two questions. My first question is, given that it's a related party transaction, how will the government stake be considered when the voting comes? Is it a minority stake and hence they would have to approve the transaction, or is their approval not required? I'm just trying to understand.
Your voice is not very clear. May I request you to come in a better reception area, please?
Yeah, I'm just, now am I audible now?
Yes.
Yeah, so just how will the government stake be considered and have they given their in-principle approval for this transaction?
We have this is approved by the board, and of course the board approval follows approval or recommendations by the audit committee, and further for course of actions, all due approvals will be sought wherever required as per the law.
So the government nominees on the board have approved the transaction. Would it be fair to say because the government nominees are there?
When we say board approval, we don't say individually which director opined what, but we can say overall the board has approved it.
Okay. And how does the Hindustan Zinc plan to fund this transaction? I mean, how much debt will the company be taking to fund this transaction?
So at this point of time, if you see the consideration has been, the timeline has been put at 18 months, and it will be in the chances, this is a certain milestone. So I believe most of the transaction will get funded for approval.
Okay. Fair enough. Thank you very much.
Thank you.
Thank you. Next question is from the line of Prashant Kumar Kota from MK Global. Please go ahead. Prashant, may I request you to unmute your line from your side and go ahead with the question, please?
Hello. So thanks for the opportunity. And sir, I would like to know more about this transaction. On a scale of 1 to 10, how confident are you in terms of getting back, bringing these assets to the assets being acquired to 1 million ton per annum output and to quartile 1 in the cost? So on a scale of 1 to 10, if you could express your confidence, that would be really helpful to us and the investors.
So from my long 30 years experience in mining and my, since the time we moved this proposal to board, and the discussions that we had and my own personal involvement in due diligence, I can tell you apart from the factoring of 10% uncertainty which is there in any mining project, I am absolutely 90% confident.
Thanks, sir. That's really comforting. And sir, secondly, you've spoken about the milestones being met. If you could broadly, briefly tell about what are these milestones and that are needed to be met, apart from the regulatory approvals, of course.
So there are certain milestones like they have certain approvals which are required from the government for certain tax exemptions kind of thing. So the deferment has been there on account of that. The deferred consideration would be payable basis that. So there are certain milestones which they will do.
Okay. So the broad the deadline is 18 months, but do you think this will consummate within that, or is it front-ended or back-ended? If you could, what do you think? What's your best guess, sir?
Your voice is not clear. We could not understand. You could repeat.
Prashant, may I request you to speak through the handset, please?
Okay, sure. Sir, what is your best guess on the timing needed to consummate this practically?
So if you read our press release, it talks about the 18 months for completion of the transaction, which will like acquisition, regulatory approval, payment in the tranches. So total 18 months have been put up. In the phase manner, there will be a payment.
Sure, sir. That is the outer end. So it is possible that it could be closed within, let's say, 6 months.
So we are expecting the shareholder approval by Feb end.
Understood. Okay, sir. Thank you. And all the best.
Thank you. Participants using speaker phone, please pick up your handset while asking a question. This is required to ensure optimum audio quality on the call. Next question is from the line of Rahul Jain from Systematics Group. Please go ahead.
Yeah, hi. Thanks for taking my question. Sir, once again, coming on the transaction, so what are the key assets over here in terms of size-wise, and what kind of any number on volumes you can throw, say, what you can see 1 year after transaction or 5 years after transaction? I mean, what kind of further investment would be required?
So there are 2-3 things to be seen here. One, let me also give the strategy perspective. If Hindustan Zinc is to grow to 2 million ton, with Indian resources, it is not possible, because our current mines, if you look at the expansion programs altogether, will limit at around 1.2 million ton. But traditionally, for last 5 years, we have been stagnating at around 1 million ton only. And for last about 2-3 years, we have been following up. There has been no new zinc mine has been opened up or put up for auction in India. World over also, there is no more such property of that such size which is available for acquisition. So in that case, this makes the right choice for Hindustan Zinc to grow. That's what I said, in 2 different geographies. If the property-wise, if I look at it, it has got about 35 million ton plus R&R. Main properties are located in Hamsburg in South Africa, in the Aknis is the name of the area, and the Northern Cape, and close to it is the original Dips and Swartberg mines, and also it has got in Scorpion Zinc in Namibia. These are the 3 biggest properties around which all the ores and R&R is available. Today, the open cast mine is fully operational with 4 pits. Underground mine in both Dips and Swartberg are operational as are on the expansion path. The Hamsburg mine, where the 4 pits are already operational, so there all together we are producing about 300,000 tons of metal in concentrate. The projects are on just now as we speak for expansion of Hamsburg mine to take it to 600,000 tons in 2 years of time, doubling the capacity, and also looking to put up a smelter in Hamsburg as well as restart the smelter in Namibia. Property already has a smelter. Little bit of modification has to be done. So those will be done to add both these capacities to convert 600,000 tons into metal. And then third phase of expansion will be by adding another 400,000 tons when you open up the underground property in Hamsburg, and then take good grade ore which is there at a depth and add another 400,000 tons.
Right. So today already we are doing about 2,000 crore EBITDA in the zinc asset. Is the right way to look at it?
Today, for this 9 months decade, we must be. You are asking the currently one, or you are asking for the future?
No, current in the sense these assets which you say, which you have elaborated, they already have.
Yeah, I got it. So last year they closed with the 206 million of EBITDA current of the FY22. But currently looking at the run rate, they are going to do between 250 to $300 million.
Right. So how would you break up the acquisition cost in terms of the producing assets as well as the second, the under development assets? So is there any split on this number, $3 billion?
So total valuation considered all the aspects. You have to look at it has a 35 million ton of the R&R. So which we see the SRK certified report, it is 8 billion ton of the proven reserve, remaining in the major indicated and inferred category. So while the valuation has been done, by the value of all the relevant aspects has been taken into account. And of course, we are focusing more on the ZI project and their growth, and obviously their cash flow will also have to be taken into account. We cannot look at only the historical EBITDA to further.
No, I absolutely understand. My point is that in terms of the multiple that you would have given for the assets which are already existing and for assets which are under development, can you give a breakup of that?
I think at this point we would like to avoid. We were just talking about the overall 2,981 million of the R&R, so 35 million ton of the R&R for which we are deciding the payment.
You are saying say a number of KT currently, you can reach to 600, and then what is the time? What is the number in mind?
Overall 1 million ton.
1 million ton is the number in mind overall.
It has to be another Hindustan Zinc.
By 2027 or any, what is the timeline you're looking at?
By 2025 it will be 600,000 tons, and by 2027 or 2028 it will be 1 million tons.
And where would you place it in terms of the cost curve, where we are at Hindustan Zinc India? Would it be similar or
parallel to Hindustan Zinc cost curve? Around at 1 million ton it will be around $1,000 per ton.
Right. Thank you very much. Very helpful.
Thank you. Next question is from the line of Pallav Agarwal from Antique Stock Broking. We move to the next participant. Next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, good evening. Just some clarifications. I got disconnected in between. So this development of the management fee now being paid to Vedanta, is it already been started? And is there any shareholder or any other approval required for this decision?
So this matter does not fall into any scheduled shareholder agreement also, and as per the Companies Act and SEBI adjournment, it requires the audit committee and board approval.
Okay. So what is the limit of transaction with related party that falls under shareholder approval?
So any shareholder approval required if it is beyond the 5% of the turnover.
Got it. And this agreement has been signed for how long? I mean, when is the next revision, if at all it has to happen?
So this agreement will be signed now after the board approval.
And for what time period? 2 years,
So
3 years?
Signing for the 3 years.
Okay. So the next, got it. Second, with respect to this acquisition of Zinc International, I mean, they've mentioned the payouts will be staggered based on milestone. Just want to understand what sort of milestone are these? Are these operational, the volume-related milestone, or some other regulatory approval milestone?
So these are largely regulatory approval related milestones, but large of the chunk of the payment will go in the in the next 3 to 6 months.
Okay, and shareholder approval we are expecting in February.
So we are hopeful to get shareholder approval by February end.
Okay, and what are the other approvals apart from the shareholder approval that will be required?
I think this is a normal acquisition. It will require only shareholder approval to execute the transaction. I don't think any further approval is required.
Okay, so but we still expect over 18 months payout. Is that the right understanding?
Because we have the deferred consideration which has been considered, so that's why it has been written the 18 months.
Okay, got it. All right. And next year we are expecting tax rate to be around 25%, right?
We are expecting next year tax rate 25% as we will move to the new regime.
Got it. And just one last clarification, we are continuing with our full year cost guidance and the volume guidance, because this press release does not mention anything.
Of course, we are maintaining the same thing. The volume, as Mr. Mishra said, we are on the right path and we should be in that range or maybe marginally better. In terms of cost, as of now, it's like 9 months 1273, and we are expecting in the Q4 with the lowering the coal index and better domestic linkage coal availability. We should be in a much. We are 100% confident we will be in the range which we have given to the market for 1225 to 1275.
Thank you. So Mangal, I'll request to come back in the question queue for a follow-up question. A request to all the participants, please restrict to 2 questions per participant. If time permit, please come back in the question queue for a follow-up question. Next question is from the line of Alok Devra from Motilal Oswal. Please go ahead.
Hi, sir. Good evening. Sir, just if you could repeat what's the cost of production we are looking at for the fourth quarter. I missed that number actually.
So I think for the fourth quarter we can't specify, but overall what market guidance we have given 1225 to 1275, we will be well within that.
Sure. And also, sir, on the acquisition, how much debt we are looking at to take from the market for that? Because you mentioned in the press release of some external debt as well.
No, at this point of time, as I say, it should be largely funded through the internal accrual. As just simply I give the answer when some other analyst asked. So it will be largely funded through the internal accrual. We are just putting as an enabling thing.
Sure. And sir, just one more thing.
Just one thing, if you see on the overall balance sheet side, 482 crore is there, and we are having the Q4 cash flow will also be there. So and the transfers will be there. So it means at the net debt level, we will be obviously exceeding the numbers.
Sure. And sir, just last question on this, coal linkage. So how is the situation there now? What can be expected in Q4?
We have seen slight improvement in the coal linkage from Q3, but still not up to our satisfaction. We believe that from February onwards, we will get that the indications are from the coal authorities that the linkage numbers are going to increase, number of rakes that we get per month. So Q4 numbers will be better than what it was in Q3. At the same time, our high cost stock of imported coal is almost will be over by January end. February, March, we should be getting more of low-cost imported coal, so we should get that benefit.
Okay. Just one actually follow-up question, sir. With this acquisition, assuming it goes through, so next, say, 3 to 4 years, what kind of, numbers we are looking at on the, mining side? I mean, how much can we do with that? Because that ramp up, everything which you are talking about will take its own time. So any number for FY or, for, say, 3 to 4 years down the line we can look at?
4 years down the line, the Hindustan Zinc will stagnate at about 1.1 million ton metal level. Okay.
Right.
And in 2 years' time, I should look at somewhere around 300,000 tons of current production will go to 600,000 tons in case of ZI in their NIC. And in 4 years' time, they should be close to 1 million tons.
Sure. So combined 2 million could be achieved in 4 years.
Combined 2 million could be achieved.
Sure. Okay, sir. That's all from my side. Thank you and all the best, sir.
Thank you so much.
Thank you. Next question is from the line of Ritesh Shah from Investec. Please go ahead.
Hi, sir. Thanks for the opportunity. First, congratulations for the masterstroke. Sir, I just have a couple of queries. One is, if I read the press release right, basically it's an overseas entity transacting with a wholly owned subsidiary, which is also overseas entity. So would it be fair to assume that there won't be an element of long-term capital gains tax?
No.
Okay, and that helps. So second clarification, I think in one of the prior questions, it was asked that there is no majority of minority required, and you did indicate that it is not required. Did I hear it right?
Majority of the minority will be required, like the shareholder approval. We said shareholder approval will be required. So as per the SEBI law, since the related party transaction will require majority of the minority.
Thank you. A request to all the participants, please restrict to 2 questions per participant. The next question is from the line of Kiran Mehta from BOB Capital Markets. Please go ahead.
Thank you, sir, for this opportunity. I would want to go back to the transaction in terms of the approvals. While you said that the shareholder approval is targeted in February, and at the same point of time, there is a deferred consideration which is linked to the regulatory milestones. So which are these regulatory approvals which we envisage over 18 months? Could you elaborate more on this?
I think we are not talking about regulatory approvals of in India. We are taking certain regulatory approvals which these entities would require in their respective geographies. Once they receive it, then it will be paid to them.
So this is basically the approval in South Africa and Namibia related to transfer of ownership to another subsidiary. Is that
correct? Correct.
Right, sir. And in terms of, would you also sort of give us a pro forma net debt number, net cash number for the Hindustan Zinc after completion of this transaction, extrapolating balance sheet?
So if you see, like 2.4 billion is the immediate cash consideration, and Hindustan Zinc is sitting as of now about 16,500 crore. And in the Q4, whatever the numbers I can't estimate and predict, but at this point of time, if we say, given the performance which we have, we should be having a good amount of balance. And even after paying off this, we will be having a very good asset in our books. So net pro forma number, obviously, when we purchase any asset, the cash will go, but at the same time, we'll get the asset, which is not available globally at such kind of large 35 million ton R&R. So I will pay the cash and I will get such a beautiful asset which will add to the Hindustan Zinc and make Hindustan Zinc total almost 13% of the market share globally in the zinc and make the number 1 zinc producer company.
Thank you, Mr. Mehta. I'll request you to come back for a follow-up question. Next question is from the line of Ashish Kejriwal from Nuvama Institutional Equities. Please go ahead.
Yeah, hi. Thanks for giving me an opportunity. So just one clarification. In this transaction, whether government will be considered as minority or it's a part of the promoter group?
So we are, as of now, we have only got the board approval, and we will go for shareholders approval, and we will see it at that point of time. As of now, we are not making any opinion on such things which are subject to legal opinion, and perhaps me and Sandeep are not in the best place to comment on such things.
Okay. And secondly, when we are saying that all money, this $2.9 billion, that will be paid to Vedanta only, or there will be some infusion into Zinc International also on account of this? or this is entirely different from whatever CapEx we are talking about?
So if you understand the total valuation, it has been done on the DCF method and the 20% of the payment is deferred. And majority payment will be paid immediately after the shareholder approval, as I said. And the payment will go to obviously to the Vedanta Limited, and whatever the future projects are there, it will be like funded by Zinc International itself, as they will be having their own cash generation. Lot of projects are coming on the line.
Okay. And sir, when you are talking about up to 2.98,
also note that entity is a largely debt-free entity. So they have got strong balance on their side also to draw cash and infuse into their own business.
Sure. So when you are talking about up to $2.98 billion, so what's the possibility of coming down or something, because it's a fixed transaction? So is this somewhat variable attached to it?
So as I said, 2.4 billion roughly is an immediate cash consideration, and remaining $550 million is up to the milestone. Once these milestones are achieved, that time it will be paid. So that's why you see the transaction timeline also going to the 18 months.
Thank you very much. Ladies and gentlemen, that will be the last question for today. I now hand the conference over to Ms. Jhalak Rastogi for closing comments.
Thank you, everyone. With this, we close today's earnings call. For any follow-up questions or clarifications on the results, please feel free to reach out to Investor Relations team. Thank you.
Thank you.
Thank you very much. On behalf of Hindustan Zinc Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.